prices are hovering around their lowest level since June as demand concerns continue on the rise in COVID-19 cases. As Nigeria State Oil Companies also says it's open to give up its majority stake in its 4 refineries. Uchenna Minnis, the managing partner at Blufx, joins me now as we discuss some of the latest stories impacting the oil markets. Uchenna, first let's get into prices and what your take is in the medium term.
I still see a depressed level for oil prices. The problem here is that demand has continued to stall. What the bullish sentiment we saw in oil pricing in the last recent months is as a result of market participants front-running the positive risk that has to do with economies opening up and business and economic activities picking up. But that is looking at, as it's really presenting itself currently, we can see that those things are just theoretical, not really practical, and even some economies are looking to even shut down, go to some level of partial lockdown, like what we are seeing in Singapore. So the idea of having a pre-COVID business and economic activity is now literally being priced in the market, and that's why we are seeing some sort of stagnancy when it comes to oil prices, or a more downside pressure as you may have it in recent times.
All right, and I understand that OPEC Plus will be meeting next week, and they're definitely going to be looking at this, the pact that they all came together with. What's your take, and how do you see this impacting Nigeria?
Sorry, can I say that again? I think I wasn't exactly clear with the question.
Yeah, next week we're expecting that OPEC Plus are going to meet and to talk about, to review the current supply pact that they all have, and looking at what Saudi Arabia has been doing with prices. I'd like to get what you think, how you think Nigeria should position itself going into that meeting.
Right, Nigeria has sort of been an outlier in recent time, and in the last OPEC meeting, it was really hammered. The GMMC meeting, it was hammered that Nigeria needed to get its act together because it's one of the leading laggards in terms of production cost. So the issue here is the meeting is still going to emphasize how member countries need to stay on compliance. And if that is not the case, and the reality is we really cannot afford to continue to cut our production. And you know what is happening in our local FX space, and oil sales is a significant source of this FX revenue. So in that reality, I think theoretically we can go back and agree that we will do our best to meet with our production quota, because Nigeria, Iraq, and Kazakhstan, which are the major laggards in terms of production quota in the recent months, have also agreed to continue to cut to make up for their shortfall going into the end of the year. But I don't see that really happening, and I think that's what's going to really be reinforced and reiterated in the coming OPEC Plus meeting, really.
All right, now still on Nigeria now, let's look at the State Oil Company and the recent conversations around the fact that they are now open and to give up their majority stake in the refineries. As you recall, the refineries have been shut down for quite a while now, and I'd like to get your thoughts on this position and how you see this could play out in the market.
Well, it has always been a problem for us, and it's from time immemorial. Really, the idea I can't understand. I can't understand, Kenneth, why we don't have refineries working. I don't understand it. There is no. I can't make sense out of it. You know. So when we talk about FX pressure, liquidity crunch, and all, this is exactly what we are facing now. We're sort of deregulating when it comes to PMS pricing, but the idea is when we export crude oil to receive USD, we will still need to buy the refined product again, which the foreign exchange, to get that into the country for you. So when you look at the counterproductivity in that regard, you realize that all for us to be able to control some high level of inflow with FX reserve, it's just for us to have 2-3 functional refineries that would take the major bulk of this loss of FX revenue into trying to get products back into the country. So the fact that we don't have refineries working, it's just us going on a wide good chase. It's literally like a dog chasing its tail.